welcome to this week's edition of MFB News. I hope everybody is tip-top and had a fabulous week. All fine here. Busy, and it's not raining, so I think in the round winning this week. Now, in terms of what we've got for you today, we're going to cover off what's been happening with swap rates, how the impacts are of that on mortgage interest rates. We're then going to turn our thoughts to the latest nationwide house price index, talk about what's been going on with house prices, some interesting data available there, and then finally we're going to wrap up with a new product that's come to market, which is for those investors who are looking to do a refurbishment project and then looking to retain the property as a rental afterwards. So some really interesting content for you this week. Okay, so in terms of swap rates, first of all, and I'm afraid we're still going up rather than down, which is very, very frustrating. So 2-year swaps, as of 10:45 last night, were just over 4%. 1 month ago 3.7 and 1 year ago 5%. So month on month we're up by 0.3, but year on year we're down by circa 1%. So there is a positive in there nonetheless. Very similar story on 5-year swaps. So as of last night, 5-year swaps were at 3.8, 1 month ago 3.4 and 1 year ago 4.5. So you can see the same kind of pattern. What is going on here? So you all have heard in the news that there's kind of added expectation about base rate coming down next month. There's talk about unemployment reducing and wage growth slowing. So that's kind of all really promising. They're going to say, people are saying it's going to put extra pressure on the Bank of England to reduce base rate next month. So bearing in mind that we always talk about how swap rates are a projection of base rate, then one would be forgiven for thinking that swap rates should be coming down at the moment, but that's not the case. And why is that? And I think it's going to be linked to lots of things actually, because it's not just base rate that goes into the kind of pricing on swap rates. It's to do with the US data, oil prices, gilts, the conflict in the Middle East. There's all these things going on which is beyond just UK base rate. So I think realistically, I'm hoping this is just a kink actually, and things are going to kind of level out again. But there is definitely an impact on the mortgage market in terms of lender pricing changes. So we've seen a bit of a run on lenders pushing their rates up, and you're going to notice a bit of a trend here actually in terms of the types of lenders that are putting their rates up rather than putting them down. So Lend Invest and Mortgage Trust have increased their rates by 0.1%, Molo by 0.35%, Paragon have increased their multi-unit and HMO products by 0.2%. We've seen other repricing from Zephyr, Keystone. I mean, there's a whole wave of these lenders, but these are the lenders who are largely reliant on the capital market. So because they're totally exposed to swap rates changing, swap rates have increased, therefore their cost of funds have increased. They have no choice but to put their rates up. What you will have noticed, potentially, is that I have not mentioned any of the high street lenders in terms of their rates going up. Now, we have seen very, very quiet week actually from the high street lenders. So these guys have a mixture of funding lines. They have balance sheet money, so retail deposits, essentially to savers money, and they might be leaning on the capital markets, but to a much lesser extent. These guys aren't as exposed to fluctuations in swap rates. So the good side on this kind of turn of events is that the high street lenders are able to kind of sit back and kind of let things settle a little bit, because their pricing model hasn't changed 100%, whereas specialist lenders who are 100% reliant on the capital markets, their pricing has changed definitely, and so they have no choice but to react. So in terms of pricing changes from the high street lenders, we've seen a couple of reductions, very, very small, Skipton and a couple of others, nothing to really write home about. So I think realistically, I think it's just a case of watch this space. If you are thinking about making a mortgage application to a specialist lender in the next week or so, I definitely encourage you to hurry up and get on with it, because like I say, rates are increasing. But actually, realistically, at the moment, is this just a kink? I suspect it probably is. I don't think we're on another kind of mini budget swap rate horror, but I would encourage you, like I say, to get rates in, because lenders are repricing upwards at the moment. So please don't miss out. Okay, now Nationwide have released their latest house price index. I thought we'd just have a quick nosy at that and see what they've got to say for themselves. So the first thing is that house prices are up 3.2% year on year as of September this year. So that's really positive. So essentially, a property is worth 3.2% more than it was 1 year ago in the UK as an average. So this brings the average house price in the UK now to £266,640. The most expensive region is, unsurprisingly, London. The least expensive region is the north. The strongest annual house price change has been seen in Northern Ireland, and the weakest annual house price change has been seen in East Anglia. Okay, so what's driving, first of all, the house prices doing relatively well? So essentially income growth has been being really, really strong. We know that wage inflation is running now above general inflation. And also we've seen interest rates come down. So these things combined has really sort of helped to kind of get the market going again and drive up purchase activities. This is all really helping things out. Now, in terms of the kind of more regional data, so as I mentioned earlier on, Northern Ireland was the best performance. Their prices were up by up to 8.6%, which is incredible. Scotland saw an acceleration as well, so their growth is at 4.3%. Wales at 2.5%, and the prices in England, were up from by 1.9%. So quite a lot of disparity there. I'm not entirely sure what's going on in Northern Ireland, by the way. I couldn't call it. We just aren't close enough to Northern Ireland here at MFB. But obviously the guys in Northern Ireland will be feeling very pleased with how their house prices are doing, unless they're trying to buy something, of course. Now, in terms of England, and we kind of split the country into two. So Northern England is definitely outperforming Southern England in terms of the prices there. So Northern England saw a price increase average of 3.1%, Southern England 1.3%. So definitely a north-south divide still very much in play there. Now, in terms of property types, so over the last 12 months, the terraced houses have seen the biggest percentage rise, with average prices up by 3.5%, semi-detached houses and flats by 2.8% and 2.7% respectively, and detached houses a more modest growth of 1.7%. So as we can see, the housing market in the round is doing incredibly well across the UK. Obviously, the headline numbers as house price growth at 3.2% is an average across the whole UK. And as you can see, when you get more kind of regional, the numbers do tend to vary. But I think the kind of key point here is that actually, wherever you look in the UK, things are definitely increasing. So it feels like we're at the end of the house price dip and things are starting to go in a very much a consistent upward trajectory. Now, I just want to talk briefly about a product which has come to market, which has really piqued my interest, because there used to be products like this which used to be incredibly popular, and then they kind of went away during the last couple of years. Now they're starting to make a resurgence, and these are refurbishment buy-to-let mortgages. So when we're thinking about a refurbishment project, excuse me, where you're going to retain the property, but at the moment, at the point of application, the property is not lettable in its current condition, you would need to apply for a bridging loan, and then once the works are completed to the property, you would then apply for a buy-to-let mortgage. And I think one of the real causes of concern for people and puts them off doing this is that they have this underlying kind of worry that what if I can't get a buy-to-let mortgage at the back end? It's really expensive to do two sets of mortgages. Actually it doesn't make sense. I just won't bother, which is fair enough. So what Paragon have released is very, very good. So essentially, this product is designed for those people who are looking to do works to a property, and it can be things like extensions, loft conversions, general touch-ups. What it's not going to be is like really significant development works, okay? So changing the property around a little bit, maybe changing a property from semi-commercial to residential. If change of use isn't required, you can just do it under permitted development, that kind of thing. So very kind of light touch refurbishment. So what these guys will do is they will essentially, it's still a bridging loan and then a buy-to-let mortgage at the back end. So there's no escaping that fact. But what they will do is at the point of application, the underwriter is underwriting both elements of the mortgage. So they're underwriting the bridging loan, but they're also underwriting the exit onto a buy-to-let mortgage. And when the valuer goes out, he's going to say, yep, I absolutely agree that based on what you're telling us, it's worth what you're paying for it at the moment. I've looked at your schedule of works and I agree that the works that you are talking about doing and the costings that you outline here would equate to an end value of X for the property and a rental value of X on the property as well. So what this means for the borrower is that essentially, as long as you stick to the plan, so you don't go kind of rogue and start, knocking down walls and adding on things or doing basement excavations. If you just stick to the plan of the refurbishment, then in theory, the valuer will go out at the end of the refurbishment works and say, yep, actually, I can confirm this and this have been done, everything's good to go. And then Paragon will move you seamlessly onto a standard buy-to-let mortgage. So what this does is it really removes some of the real concerns that people have in terms of the whole concept of taking a bridging loan and then having to try and get a buy-to-let mortgage afterwards. Now, also the benefits of doing this with Paragon are that you aren't paying 2 sets of legals, you aren't paying 2 full valuation fees. There is a valuation and then a re-inspection fee, but that's, you know, the re-inspection is a much smaller amount of money. And also they're very, very generous on their arrangement fees here, particularly on the bridging side. The only thing to be aware of is that, first of all, the bridge has to be in place for at least 2 months, okay? Now, that's actually a very short space of time, but if you were thinking, oh, I'm going to get in there, chuck up some paint, throw down a new carpet, have it turned around inside of 3 weeks, which some people actually are able to do miraculously, then you're still going to have this bridging loan for at least 2 months. But after that, you can move across onto the buy-to-let product at any time. There's no early repayment charges. So I think when people are kind of at the moment looking at their options in terms of what kinds of properties to invest in, looking for projects where they can see a return on their investment, this product actually really kind of leapt out at me and made me think I really need to share this with you guys, because I think it actually is a really sort of strong product that Paragon have brought to the market. And that's everything for us this week. Thank you so much as always for having a watch or listen. I hope you found that interesting. And as always, if there's anything you'd like us to cover off, do let us know. We're very, very happy to kind of answer any questions on here or talk about particular topics that are on your mind. Just let us know, and you can email us inquiry@mfbrokers.co.uk. Have a look at our website. It is full of loads of fantastic information. I promise if you go on there, you won't be disappointed. And if you want to give us a call, we'd love to hear from you. 0345 345 6788. That's it for me this week. I'll see you again next time.